Happy Monday, everyone, and happy 2021. It's great to see you in the new year. It's Alyssa Corman, Ed Carson here with a look at the stock market today. And it was a pretty ugly session on Wall Street. Significant losses across the board. There were, a bright spot or two. We'll get to that in a second. Ed, give us a preview of the stocks that we're going to be taking a look at today.
Good afternoon, Ali. Yeah, a little bit of different trio we've got here: Neo, Apple, and Shopify today.
Okay, well, we will analyze those stocks for you, but first a look at the major indexes. Here's a chart of the NASDAQ, which finished down about 1.5% today. Same with the S&P 500, while the Dow and Russell 2000 closed down 1.3% apiece. So you can see that there was a pretty significant down day compared to the rest of the action that we've seen over the last couple of weeks, but we did find a bit of support.
Yeah, so it wasn't looking so good late morning as we were down at the lows, down more than 2% through the 21-day line. That is the green line on the chart there. But all the major indexes rebounded off those levels. You're going to have tests of this kind of level. So in some ways, it can be nice because there's probably been a little bit of complacency. I think everybody's like, the market's been going up. Oh, all it can do is go up. So that can be positive. We'll talk more about that with Apple. So we'll see. I mean, what happens next is what matters. I mean, today, we won't care if we bounce today, if we end up selling off for the next 6 or 7 days. If we rebound from here, everybody will be pretty happy. I mean, it's not exactly clear why. Tax selling, coronavirus cases, the Georgia runoffs, but you just have to keep in mind how your stocks are doing. I mean, you want to be aware of that news, but you need to focus on what is happening with the market and what's your stocks, not try to, rationalize why stocks are down.
That's right. I mean, this is the first test of that 21-day since November, really. We had a couple of days that we shook out some shareholders, but this really is the first session in a while that we've undercut that 21-day on an intraday basis. So I think support here pretty key for this uptrend, but we will keep everyone updated on the market direction. Now let's take a look at some individual stocks. Neo, a bright spot today, gaining about 10% on positive orders for December, where its sales more than doubled. And this is yet another sign of strength from those group of Chinese automakers, Ed.
Yeah, we saw strong sales from Neo, Li Auto, Xpeng. We also saw globally very strong numbers from Tesla, but a lot of that has to do with China as well. So they were all up today. Neo, it's now, it's working on what is a 57.30 buy point, perhaps from, another week it'll be a cut base. You could draw a downward sloping trend line, I suppose, from there. If it's sort of extended from there, or maybe that high, the handle, I'm not sure where you'd like there. Yeah, it seems extended even from that or from those levels. It's clearly extended from the 10-week line. So, I mean, there were early entries that you could have gotten, and now it seems like, maybe now wait for a breakout, or if it forms a handle. It's just really, really technically strong. Just nice support after a huge run. It's just been acting very well.
That's right. I mean, we last year were pointing out a number of these entries for Neo. So, investors who were able to get in earlier in the year in 2020, sitting on some pretty nice gains here, but we had this upside reversal right at that 50-day line before the end of the year. So maybe that was a good entry, but I agree with you, Ed. Let's see if a handle can take shape. That ever elusive handle sometimes. But speaking of handles, is Apple forming one? We saw the stock close down about 2.5% today. It, like the broad market, got support at its 21-day line. So it looks like, Ed, we're almost at this proper handle here for Apple.
Yeah, it needs one more day to be a handle on a daily chart. And it actually got a shakeout now. Sometimes these handles are just if you have to squint to see it, it doesn't do a whole lot of good. You want to shake people out, and this probably shook some people out. It's not going to be a proper handle in the sense, because we did technically clear the base of 138.08 last week, but it just did it for a few seconds, and so this is sort of a high handle. I mean, you could use the old buy point or just right above that handle as the entry point, it's not going to be a whole lot of difference. You almost drew a line right through it, the difference. But it's so this was a nice test. The relative strength line has improved over the last few weeks. If it comes up here, this would be it's definitely one to be watching at this point.
Yeah, I mean, if it can kind of hover around this level tomorrow, and then maybe it shoots up above a trend line there, maybe that's an aggressive entry as well for those keeping an eye on this handle here, even though we, as you pointed out, some of it, the technicalities there with it not being quite a proper handle. But let's also check out Shopify. This is a stock that has gone on a number of moves over the last couple of years, a stock that we've talked about quite a bit. We pointed out a number of the early entries with this one, but Shopify now round tripping one of the entries here, Ed.
Yeah, I mean, because this was a consolidation, you're not seeing it show up. It doesn't show up on pattern rec, but it seems like the proper buy point was right what you're drawing there, right over that level. I think the number was like 1152 or 1112.52, something like that. And it is now round tripped a 15% gain. It's below that. Usually if you round trip a 10% gain or more, that's a pretty strong sell signal. I mean, it isn't an absolute, you have to do it. You're excommunicated if you don't do that, but it's definitely not a positive action. We saw that with some others. I mean, software is coming under some pressure in the last couple of weeks, and Shopify is no exception.
Yeah, and not only did we see this round trip from a double digit gain, but that also coincided with a move below this 21-day line, which is a level that we like looking at not only for the major indexes, but also top growth stocks. That can be a level at which it can do a lot of things. Maybe if a stock is on a run and it pulls back and rebounds off of that level, maybe that's a chance to add some shares or maybe even initiate a position depending on how you're sizing it, but also a level to either take partial profits or get out. And with where this 21-day line is at, could have given it a chance as where from where it closed in the prior session, but today for sure seeing that round trip. But we'll have to see what Shopify can do from here. It's still above that 50-day line. So I think that is the next level to watch on this Shopify chart.
It certainly could rebound from that. The 10-week line might be even closer. So yeah, it could certainly do that. But the thing is, you just have to watch out. You don't want to see gains of that size turn into losses. So it could turn around and do that. Sometimes that happens, but you just have to try to set up rules that work most of the time, that keep you out of real trouble. You wouldn't want to be in a situation where this drops to 1,000 or 900 and you were waiting, I'll just wait till it bounces a little bit more. And so, but you're right, it may not be finished. It might bounce right from here.
Well, yeah, you never want to hold an hope, but if you're here watching this stock on the sidelines, it would be great to see a rebound off of that 10-week line. So we will be keeping an eye out for that. And you know where else we are keeping a very close watch on a lot of stocks? That is IBD Live. It's our daily morning live stream where our experts are sharing their screens, talking about top stocks on the move, not just buying strategies, but selling strategies as well, portfolio management tips, and broad market action analysis, you name it. There's a little bit of everything on the show. And we also have a very special guest coming up on Wednesday's episode, David Ryan, market wizard, US investing champion, friend to IBD, one of Bill O'Neill's proteges. He will be joining the show on Wednesday morning. So if you haven't yet checked out IBD Live, I highly encourage you to do so in time for Wednesday's show. You can check out all the details over at investors.com/IBD Live. And we talk about IBD Live so much, Ed, because we are participants in it, but investors.com is also, of course, a really great place to stay up to date on all the latest stock market news and analysis that you need as an investor to help shape your portfolio decisions. And Ed, talk to us a little bit about some of the features on investors.com that investors should be aware of as they maybe tweak their investing routine for the new year.
Well, we have tons of market columns in the stock market today throughout the day where we really focus not just on major indexes, but the stocks that people are really going to be interested in. But beyond the market coverage, and there's so much great market coverage, even just with I mean, obviously I'm the news editor, so I like to think of this, the news and the tech teams, we're really trying to focus the stories and then on focusing on more on the companies that are really important and really for growth investors, and then doing some
Mhm.
technical analysis even in there. So we really try to infuse the can slim philosophy throughout all of it, all the coverage, even just the news selection. So I think it's very useful for investors.
It is. So make sure to check that out, whether it's investors.com, the IBD app if you're on the go, or follow us on social. Thanks so much for watching, everyone, and we'll see you back here tomorrow.